Okay, so this is a first for me. I'm going on a road trip today, and I thought this morning, why not try to leverage my time not only to do some research on investing through listening to different videos as people talk about the market and different stocks that I'm interested in, but also to make a video and share some ideas with you as I'm going. So today I'm going to pick up my daughter at the end of her first year of college, her freshman year, and pack her up and bring her home for the summer. It's a very familiar section of road, so I think it'd be totally fine to be a little bit sidetracked, a little bit distracted in sharing some thoughts as I'm going, and hopefully you'll enjoy the trip with me. I recorded all this audio while driving, but then realized there was so much road noise I really had to redo it. So hopefully this makes it a much better experience. One thing that I've learned today while I'm driving and listening to different videos and different updates, I've heard that Netflix is now moving forward with trying to push up the timeline as far as adding ad-supported tiers to their service, which is fantastic. If you watched my last video about Netflix, you know I was pretty critical, and especially about that I really wanted to see some action from their leadership, that they would push the timeline forward with offering an ad-supported tier for their customers. So that's very encouraging, but right now it's just words. Words are easy. I want to actually see them do it. But that does make me glad that I didn't give up on them and sell out of the stock, because I think it's got a lot of potential if they make some changes to really get going again. Another topic I've been thinking about a bunch as I drive and as I listen to different commenters is diversification. You hear people with all kinds of opinions about diversification. For years now, I've believed in having my portfolio pretty focused, but I think I'm leaning towards even more focus instead of being more diversified. My portfolio has been pretty heavily concentrated toward my top 5 stocks for a couple years now. For most of the time, if you took my top 5, they were easily the top 50% of my portfolio. And during this downturn, it's been eye-opening as far as how little real conviction I have for the minor parts of my portfolio, the really small positions, the stocks that I only have a little invested in. It's very easy when things are positive and you're in a bull market and you're hearing different ideas that sound good. It's very easy to have shiny object syndrome where you're thinking, oh, that looks good. Oh, I like that idea. Oh, I want to be a part of that. And really, for the quality of my investment choices to end up suffering. For me to have a really high quality portfolio and really have a deep, almost intimate level of knowledge on the different stocks, the different companies that I invest in, I have to get even more hyper focused. Some people advocate having like 10 to 12 stocks and really make sure that you have a strong depth of knowledge on each company. While I'm not saying 100% that that's what I'm going to do and stick to long term, it's definitely something I've been thinking about. I would say a year ago I probably had 35 different tickers in my portfolio, and today I'm down to 15. And really, that's come from really questioning during this downturn, which companies do I believe in the most and which ones do I really trust with my capital. When we hopefully get started on a new bull run someday, instead of letting that list grow and expanding 25, 30, 35 different companies again, I'm leaning towards trying to keep it tight and focused. I've always wanted to have the majority of my capital invested in my best ideas, but I think I need to up my standard of what level of quality a company needs to get any of my money. My last position, my smallest one, why am I choosing to invest in that company instead of rolling that money into one of the others? There has to be a good reason, or else I really should roll that money into one of the others. I know for a lot of people, diversification is an emotionally important safety net. If you have your capital spread across more tickers, then you don't move up and down as much in a day or even over the long term. It's not as rocky of a ride. In my case, I'm not saying I'm completely immune to feelings when I see the results of the market, but I really don't have the emotional reactions that you have when you're new to investing. Over time, you become desensitized to it, both on the upside and the downside. I don't know if that's a mentality that you have to choose to develop or if you just become desensitized over time as you get more experience in the market. When the market goes up a lot, it's not like I get super excited. That's what I expect over time. It really has to be one particular company doing something really extraordinary that I didn't expect to make me feel really that high at all. And I think even more importantly, I've gotten the same about those red days, especially during the past couple of months. You see red day after red day, and the thing is, I know it's only temporary for my companies. Unfortunately, it probably means a lot of people making a lot of huge mistakes and losing money, but that's not me. My balance is going down, my portfolio total value is going down, but I'm not actually losing anything. I still own the shares in these great companies. The first time I had a red day where my portfolio dropped the amount of money I make in a month, that was a tough day. Now, shoot, in the past month, it seems like that's every second day. I just call it Thursday. It happens all the time. Now that's a lot of money to me, and it's meaningful. But when you truly believe in the companies that you're invested in, it's a mind game. I know Tesla is going to be fantastic in the future. I know that Google is going to be great in the future, and I can go down my list and analyze each company and ask myself, do I really know that this is going to be a fantastic company in the future? If the answer is yes, then I can rest easy at night. I can relax and say, I don't really care what it's trading for in the market today. All right, so after a couple hours of loading the vehicles, we're headed back home, and I'm going to reflect a little bit more on what's going on in the market. As I'm driving today, one of the things I'm thinking about is how different things are from the time when I went to college to now. There's a really important idea coming with this one, so hang with me. It'll take me a little while to get there. Rewinding back to the time when I was leaving my freshman year of college, it would have been 25 years ago. Did we have cell phones back then? Yes, we did. We would have had to stop the vehicle to make a phone call. Now you might think that sounds lame, but back then your phone had buttons, and the screens were so tiny and pixelated you couldn't even see what you were typing half the time. And you couldn't just talk to them and tell them what to do. So you would literally have to stop the car and focus on what you were doing to make a phone call or text. Now, while you're driving, you do all of that without even paying attention. Did we have directions on our cell phones? No, we did not. Not on those little flip phones from the 90s. But today, our cell phones or vehicles will speak to us and tell us directions all the way as we go. It feeds us information like speed, upcoming directions, ETA, options for gassing up, and restaurant choices ahead of time. We constantly have all this information just available to us. That did not exist 25 years ago. And I'm not telling you anything that you don't already know, that you're not already using on your own, but I have a point I'm getting to. Hang with me. Today, as I'm traveling, when I stop at a gas station, I go and get something. I don't even bring my wallet in. I just bring my phone close to the register, and the phone reads my thumbprint, and the money is suddenly transferred from my bank account to that company's register. Here's my point. Think about the changes that have happened in these past 25 years. We would never have even dreamed of those things. Those are the kind of things that you would see in movies and dismiss as impossible. There were things that we as a society expected to happen one day, someday, but these are not those things, not 25 years ago. Now project that kind of idea going forward. What will the future be like 25 years from now? The things you hear people predicting, that's the near term. That's the next 5 years, maybe the next 10 years. My point is, so many things will change that we can't predict and don't know what to expect, that 25 years from now, there will be changes that would literally blow our minds. And I want to be investing in companies that are dreaming of those things, that are pushing the boundaries of how far ahead they can imagine and try to extrapolate and try to figure out and solve problems and create solutions for things that we can't even wrap our head around right now. You know, back then, you would have listened to the radio or a CD when you drove, or maybe even a cassette tape. What's happening in the news, what's happening in the stock market, what's happening in politics or sports, you would have miles and miles where there was nothing to do but talk to someone else in the car with you or listen to music. We didn't have YouTube or other social media platforms that we could access on all kinds of different devices that we just pull out of our pocket and they connect everywhere we go. Just think about how different it is. Today, with one device, we switch between driving directions, text messages, speaking on the phone with someone, watching a movie, listening to a podcast, watching a YouTube video, so many different things, and you're doing them all in overlapping and interchangeable at one time with one device while you're driving the car. This makes me think about people who don't really see the future. I don't talk about Tesla in my videos very often. There's so much good content out there, but there are people in my regular everyday life that I talk to that can't even accept the idea that full self-driving is really going to happen one day. They question whether it will ever happen. Will computers ever be able to drive a car as well as a human? I think that's a done deal. 25 years from now, it's going to happen far sooner than that. I believe it will be in the next 3 years. I think in 2047, if you're driving a vehicle manually, you will be a very rare person who has gone to the trouble of earning a very rare human license. Autonomous vehicles will be such a standard thing that we won't think a thing about it, and we will optimize our travel time around what you're going to do while you're in that moving box on wheels. Are you going to use that time for work, for study, for entertainment? But here's what I'm trying to say. Even that part is 5 years from now, maybe 10. What will 25 years from now look like? It's so far beyond that we don't even know what to guess to imagine. As an investor, I am looking for companies that can dream of those big dreams far off into the future and get started now. So let's transition to thinking about companies that have no vision of the future. Let's continue to use self-driving as an example. It was just announced recently that ARK Invest has started investing in GM because of their cruise automation solution. You may not be familiar with that, but that's GM's project trying to work towards autonomous driving. Their strategy is to map particular cities and offer autonomous driving in those specific locations. I think about where I'm driving today on this road trip. You know, a lot of country, a lot of the world has millions of miles of roads that no one's going to want to pre-map. And it's not going to make sense for the number of people that live in these rural areas for GM to pre-map and remap these locations every few years to keep them current. In my job, mapping software is a big part of our industry. As good as Google Maps and Apple Maps are, there are a lot of mistakes because these maps need to continually be updated. There's a place within a mile of my house where a road was rerouted, rebuilt, and Google knows to tell you where to turn at the right spot, but Apple Maps? Nope. That road was moved 4 years ago. And when you pull up the satellite imaging for that particular intersection, it still shows the wrong images. So Google Maps is routing me properly and drawing an imaginary line where it knows the road is, but it doesn't even have true imaging that's up to date. I see the path forward with companies like GM and Cruise Automation being the same kind of scenario. It's not that you can't use that tool, but why in the world would we want to invest time and energy and money, our investing dollars, to back a company to build a solution that's going to face those very same obstacles? Tesla is designing a full self-driving system that will be able to work on any vehicle anywhere in the world. It's designed to take the images that it's seeing in real time and operate it in whatever environment you place it in. That is the kind of company that wins 25 years from now. All right, so if you're still watching, I really value your opinion, and I'm going to ask you to do something that YouTubers don't usually ask for. If you hate this format and you never want to watch a video that's anything like this again, go ahead and give me a thumbs down. And if you really could care less about the format and just enjoyed watching another stock investing video, give me a thumbs up. Or maybe you even enjoyed this out of the ordinary kind of format. Go ahead and give me a thumbs up. I will look forward to seeing what kind of reaction I get. Give me a thumbs up or a thumbs down, one way or the other, please. I kind of think it would be funny if it got a ton of thumbs down. I would totally understand why. I hope this video was helpful for you. I know it's been interesting for me. Have a great day.